Welcome to Explain the Charts, where we break down the news and chart data for your trading success. Today, November 12th, we're taking a deep dive into the XAUUSD, analyzing recent news and events, and how they're shaping the gold market. The recent news has been dominated by Donald Trump's victory in the U.S. presidential election, sending shockwaves through the global markets. His return to the White House is seen as a bullish sign for the U.S. dollar, which is exerting significant downward pressure on gold. Investors are flocking to the U.S. dollar as a safe haven asset, causing gold prices to dip below the key $2,700 mark. The market is anticipating a surge in U.S. Treasury bond yields due to Trump's planned economic policies, further reducing the appeal of non-yielding assets like gold. Let's turn our attention to the charts to get a clearer picture of what's going on with XAUUSD. Looking at the daily chart, we see that gold has been on a downward trend since hitting a recent high of $2,790. This decline is clearly reflected in the bearish candles, with each subsequent candle closing lower than the previous one. The recent price action suggests that the bullish momentum has waned, and a correction is in progress. The break below the $2,700 level is a significant event, as it signals a shift in sentiment among traders. It's likely that this level will now act as a resistance zone, potentially limiting further upside moves in the near term. We can also see a strong support level around the $2,600 mark, which could provide a floor for the gold price in the short term. Zooming in on the 1-hour chart, we can see that gold is consolidating around the $2,600 level. This indicates that traders are hesitant to make any significant moves at the moment, possibly waiting for further news or economic data to provide direction. The 1-hour chart is showing some signs of bullish divergence, which could be a signal of an impending reversal. The price is making lower lows, but the Relative Strength Index, RSI, is making higher lows. This divergence could suggest that the selling pressure is starting to ease, and the gold price may be poised for a bounce back. However, it's crucial to note that the U.S. dollar remains strong, and the Trump trade is likely to keep upward pressure on U.S. Treasury bond yields. These factors could continue to weigh on gold prices in the near term. The 1-hour chart also shows a potential resistance level around $2,650, which could cap any immediate upside moves. Let's take a look at the 15-minute chart to see if there are any more clues about gold's short-term trajectory. The 15-minute chart is showing a lot of volatility, with prices fluctuating rapidly within a relatively narrow range. This indicates that traders are very cautious and are looking for clear signals before taking any major positions. We can see that gold has been testing the $2,600 support level several times in the past few hours. The price has been bouncing off this level, suggesting that it is holding strong for now. However, if gold breaks below this level, it could open the door for further declines. We can also observe a potential resistance level around $2,620, which could provide a ceiling for any immediate upside moves. The 15-minute chart is providing a more granular view of the current market dynamics, showing the rapid swings in sentiment and the cautious approach of traders. The key price levels to watch in the XAUUSD market are $2,600 and $2,700. The $2,600 level currently acts as a strong support zone, but a break below this level could trigger further declines. On the other hand, the $2,700 level has turned into a resistance zone, likely limiting any immediate upside moves. The bullish divergence on the 1-hour chart suggests that a reversal could be in the making, but the strength of the U.S. dollar and the rising U.S. Treasury bond yields pose significant challenges. If gold manages to break above the $2,700 resistance level, it could signal a shift in sentiment and potentially trigger a bullish rally. This would require a weakening U.S. dollar, a slowdown in the rise of U.S. Treasury bond yields, or a significant development that shifts investor focus back to gold as a safe haven asset. In the short term, the market appears to be in a consolidation phase, with traders awaiting further news or economic data to provide direction. The upcoming release of the U.S. Consumer Price Index, CPI, data for October could be a crucial catalyst for the XAUUSD market. If the CPI data comes in higher than expected, it could further strengthen the U.S. dollar and put additional downward pressure on gold. Conversely, a weaker-than-expected CPI reading could trigger a decline in U.S. Treasury bond yields, making gold more appealing to investors. The long-term outlook for gold remains bullish, driven by ongoing rate cuts by central banks and the ongoing geopolitical uncertainties. However, the short-term forecast is more uncertain, as the strength of the U.S. dollar and the rising U.S. Treasury bond yields are currently dominating market sentiment. The key thing to look for in the coming days is the price action around the $2,600 support level. A break below this level could indicate a more substantial decline in gold prices, potentially leading to a retest of the $2,500 level. On the other hand, a strong rebound from the $2,600 level, particularly if accompanied by bullish divergence on the 1-hour chart, could suggest that the selling pressure is easing and the gold price may be poised for a rebound. Remember, trading is a dynamic process and market conditions can change quickly. It's crucial to stay informed about the latest news and events, carefully analyze the charts, and make trading decisions based on a comprehensive understanding of the market dynamics. As always, manage your risk, trade responsibly, and never invest more than you can afford to lose. Thanks for watching Explain the Charts and happy trading! Don't forget to like, subscribe, and leave a comment below to share your thoughts on the XAUUSD market.